Hello everyone, welcome to SST College of Arts and Commerce. This is SST Edupedia. I am Assistant Professor Deepika Valecha. In the last video lecture, I have explained about the valuation of a goodwill and valuation of a goodwill part 1. That was, we have discussed a topic which is of financial accounting subject of semester 2, first year banking and insurance. We have seen the introduction about it, like what do you mean by the goodwill, why the valuation is required, what are the various methods of valuation. Now in this video lecture we will be learning about how we can solve the practical questions relating to the valuation of goodwill with the various methods. So let's see what we will be covering today. These will be the topics covered in the today's lecture. We will be seeing the questions related to the simple average method. Then on the basis of the weighted average method, how we can value our goodwill. And then we will see the second method of valuation, which is super profit method and its practical sums. So let's start. Now first of all, we have seen the method which is simple average method. As already discussed in the previous video, the formula for calculating the value of a goodwill using simple average method is goodwill is equals to average profit into number of years purchase. Now for that purpose, first we need to calculate the average profit. So in the question we will be having the profits for the different years will be mentioned. It may include the loss value. Loss will be represented in minus. So let's see what is an example given here. See, calculate the value of a goodwill of Ion Limited considering the number of years as 3 years. Based on the simple average method, the profits of the last 5 years are given. Now, first of all, we need to calculate the goodwill on the basis of simple average method. Now, as you can see in the table, 5 years profits is given, and in that 2017 year, company is incurring a loss of 5,000. So, while calculating the average profit, this loss will be subtracted from the total profit. Now we'll go to the solution for this particular question. There are two steps for calculating the goodwill. Number one, calculation of the average profit. Now what is the formula for the same? The formula is total profit divided by number of years. As we have seen in the question, we have total 5 years from 2014 till 19. So what here we have done? We have added the profit of all the 5 years, and in that, if you can see, 5,000 is subtracted because it is a loss. Then total number of years were 5, so this is divided by 5. So the average profit value which we are getting is 17,440. Now the second step, which is calculation of a goodwill. Goodwill is equals to average profit into number of years purchase. In the first line, the number of years purchased were mentioned as 3 years. So what we are supposed to do, we have to multiply this average profit with that of the number of years. So 17,440 multiplied by 3, we will be getting 52,320 as a goodwill valuation. So this is a very basic method of calculation of goodwill. Now in the another method, which is weighted average method, let's see the example for the same. In the weighted average method, you will be getting the weights assigned with the each and every year's profit. What we are supposed to do, first we need to calculate, we need to do the summation of all the profits with that of the weights. That means each and every year's profit will be multiplied with that of the associated weight, and we need to make a total of it. That will be called as weighted average profit if we divide that total profit with that of the number of weights. So let's see this question. Calculate the value of goodwill of XYZ Limited for 2 years of purchase using the weighted average method. Now here from 2016 till 2020 we have 5 years with profits and also weights. Let's see the solution for the same. As you can see, we have drawn one table including the years, profit and also weights. The column which we have to add, that will be profit multiplied by weight. That means 40,000 multiplied by 2, that will come as 80,000, and simultaneously we will do the calculation. So here we have to make a total of profit into weight and weights. So weighted average profit will be 3,50,000 divided by total weight, that is 10. So the average profit will be 35,000. The second step is same only, that is weighted average profit multiplied by number of years purchased. So that will be 35,000 multiplied by 2, that is 70,000. So these were the two questions relating to the average method, which is simple average and weighted average. Now we will go to the super profit method. We have a super profit method under which we will be having 3 different types of problems, that is number of years purchase method, annuity method and capitalization of the super profit method. Now let's see what are the various steps associated with this method. First of all, there are 5 various steps associated with this method. Number 1 is we have to calculate the average capital employed in the business. Now, the formula for calculating average capital method may vary depending upon the information given in the question, and also there are various formulas relating to the same. Possibly I have written one of the formula here, which is opening capital plus closing capital divided by 2. That is a basic formula for calculating the average capital employed in the business. Now in the second step we have calculation of the normal profit. In the question we will be having the normal rate of return, that is on an average a company how much is the rate of a return an industry is earning, an industry in general is having. So that is given in the question. For calculating the normal profit, the formula is capital employed, that is from the amount which we got from the first step, that is average capital employed, into NRR, that is normal rate of return, divided by 100. So we will be getting the value for normal profit. Now the third step. Now third step is calculation of future maintainable profits, or we can say as an average profit. In basic sums we will be having the average profits. First, what is the formula for average profit? That is total profit divided by number of years. Or also we can calculate the future maintainable profits by considering the revised values of the revised values which are given in the question, and with the help of the format. Then we have step number 4, which is calculation of the super profit. Now for super profit, what is the formula? Step number 3 minus step number 2, that is super profit is equals to average profit or FMP minus normal profit. So we will get the amount which is associated with, like how much a company is earning over and above the normal profit, which is considered to be the super profit. Now till this fourth step, in all the 3 types of sums, these 4 steps will be common, like a person is supposed to calculate all these 4 steps. But for the 5th step, that is for the purpose of calculation of the goodwill, if we have type 1 problem, type 1 which is based on the number of years purchased, so what we are supposed to do, we have to calculate the goodwill on the basis of the formula, which is goodwill is equals to super profit into number of years purchased, which will be given in the question. If you have a sum relating to the capitalization of the super profits, where what you have to do, the formula will be goodwill is equals to super profit divided by NRR into 100, and if it is based on the annuity method, then annuity value will be given in the question. What we are supposed to do? We have to multiply super profit value with that of the annuity factor. So this type of a change is there only in step number 5. Rest from step number 1 to 4, all steps are similar. Now let's see one example on the basis of the super profit method. See, following information is available in respect of Mr. Narayan's business. We have average capital invested 50,000, normal rate of return 10%, profit of last 5 years is given. Then you have compute the value of the goodwill on the basis of 3 different types we have given, which is number 1 on the basis of number of years purchase, number 2 capitalization method, and number 3 is on the basis of annuity method as well. Now as you can see, our first step is calculation of average capital employed. Here already the capital employed, average capital is given. So we are not supposed to put any formula here. What we are going to do, we will write calculation of a capital employed, that is 50,000, that is already given. Then step number 2, we have calculation of a normal profit. We will apply the formula, which is normal profit is equals to average capital employed into NRR divided by 100. That formula we will apply and will get the amount for the same. Then we have step number 3, which is calculation of the average profit. The formula for the same is total profit divided by number of years. So in this also, if we have a loss, that loss is going to be subtracted and then we will be able to find out the value for average profit. After this, the next step, that is super profit, average profit minus normal profit. That means step number 3 minus step number 2, we will get the value for super profit. And finally we have step number 5, which is calculation of a goodwill. So goodwill will be, now here in this step only we will be writing 3 types. Number 1, based on number of years purchase. Number of years purchase was given in the question. So that 6240, the amount of a super profit will be multiplied by 3. We'll get the amount of a goodwill as per first method or first type. Then for second method, capitalization of super profits, what we were supposed to do, this 6240 divided by NRR, that is 10 into 100. So we'll get 62,400. And then finally on the basis of the annuity method, goodwill will be equals to super profit into annuity factor. So that is 6240 multiplied by 3.1586. What was the annuity value which was given into the question. So this was the only change in the last step which we are supposed to do in the super profit method, and this was a basic question relating to the super profit. So in this video lecture, what we have seen, the various practical problems relating to the valuation of goodwill. I hope this is clear with you all. Thank you so much.